Well, good afternoon, everyone. Scott Henderson Shooter. I'm getting started a little bit late. So at the end of the presentation, please do review our disclosures. All right, looking at the S&P, we are not bearish. We are extremely bullish right at the moment. I think we do take out all-time highs. I would not be surprised if we don't close, maybe about roughly just looking from, our prior decent retrace, including this secondary trace, the 61.8. So, $700, for the SPY is totally viable for a year-end close to me. Not only that, it's a psychological number. I mean, that's just, we haven't broken down and, we've had these dip buyers constantly. This is a better retrace, right? That's better retrace. But let me come in and I'm going to steal something I drew in the prior chart because it sort of gives the breadth of what I'm seeing. So this pattern that we have right here, steal it, is because we got this shallow retrace. Now we got this shallow retrace. Now it looks very similar. The difference is if we look at the breadth on this particular leg versus here, we are much deeper. So that means this entire pattern, we have a huge potential expansion here structurally that I'm looking at. And this is kind of exciting because that means we could have some really huge upside. And what we're going to do is see the same kind of structure, I think. We've got that shallow retrace now, very similar. So the next retrace, we should get a real deeper one. That should be our 3. So, we're going to have another ending diagonal potentially to the upside. I think that, the correction, we have so many black swans, something's going to trigger it, and for example, the US dollar JPY, that is a huge factor. And I'm monitoring, I'm looking at it every day. And the reason I am is because if that starts to unwind, and we can see that, we will see that. All right, that potentially will take liquidity out of the market. So what we need really for that aggressive drawdown into the first or second quarter is we need to lose the liquidity we have. Now, we did have some signs in crypto. The November 11th drawdown really hit the market makers. And I don't know that all of them have recovered from those losses. And that is liquidity. And realize, unlike, like when China prints money, throws it into their system, a piece of that comes back to the US. So the events that are happening in China, which by the way has been our driver in the United States for the last 30 years, them exploiting deflation is why we boomed. I don't see that changing. So we're going to have to flip to somewhere else on the planet, another financial box that can drive us lower. And the US dollar JPY is one of those. As a matter of fact, I started talking about that as soon as early 2023, just because it's such a big bubble. If it pops, a lot of markets in many different ways are going to panic, and that will be what happens. So the challenging part is how much exposure do we really want on the table here? Metals will go. And as a matter of fact, I sort of buzzed that metal report that I'm going to put out January 5th. I'm going to go across the board and cover all the metals. And so we want to be selective on what we're in, because realize even if we have a drawdown or a deep correction, right, or we have a crash, there will be certain instruments that do well during that period of time. So the diversification that we have is going to be critical as far as to how we survive that. So having a mixed basket of positions that go like in a different direction or potentially a bullish direction during an equities drawdown is obviously, I think, a fantastic thesis right now, and we should build towards that, knowing that we potentially could have the drawdown. But structurally, we want to have a model of what positions we want to hold. And obviously, each of you know your own risk threshold more so than I do. So how you model your portfolio obviously is going to be a factor, but I think we should head in that defensive direction like I just spoke about. Hopefully that made sense and I didn't get too worried. All right, so looking at the SPY and just closing with that thought, the drawdowns that Lux Algo sees here, roughly at 610 is 585 and 561, I think is very valuable. I'm going to have a hard time seeing that 613 get taken out though. Reason is because this is a very strong structure. So if this breaks down, this broadening formation, that Kurt first alerted about down here is totally viable. We take out this shelf, right? This Pandora's box is open. So again, I'm going to go back to the thesis of know when you're right, know when you're wrong. Now, what is the roadmap? What roadmap do we need to do? What are my plans to exercise? What do I buy? What do I sell when that occurs? I think that's one of the most important things. So structurally, we want to know how to break that down so we know when to exit different positions. I think I'll cover it in that metals report that right now the game plan is to have that out for the 5th. However, be very candid. I want to get back to this Trump infrastructure backbone because I think that's going to be our largest catalyst. And what that is that's the building blocks for AI, and there are going to be certain companies. That's an area that I think we need to really focus on the first quarter. And I think that grows because that is going to be the catalyst that brings us out of any recession or any drawdown that we have. So, so those two are the main focus that I have going into the first quarter. I want to focus on metals, and then I want to focus on the infrastructure. And then I also want to look at a defensive article, which probably won't be out until the 2nd or 3rd week of January, just because the amount of time it's going to take for me to put that together. So looking at the NASDAQ, I mean, really, I don't think we get this ABC. We still could get it, and I have it on the chart still. But ultimately, I think it's the same scenario that I had just looking at the S&P 500. I think chance that we're going to put in an all-time high blow off top kind of thing. This is our 2, and I'm just going to draw this for time-consuming reasons. So 3 would be our longest wave. So, we could be looking at 820 in the NASDAQ. Easy, and if it's a leading diagonal, then we're going to get real choppy. That's the problem with 3 and leading or ending diagonals. It doesn't look to me like we're leading here because if that's 2, right, it's not broad. It's not, aggressive in both directions. It's shallow. It's bullish. So that would mean that wave 4, this is going to get a real chop here. So we'll have this box. Once we start getting up here, it may start as early as, June, July 2026. And then we might be stuck in this box most of next year. But once we get that base, once we have this consolidation, then we get our correction. It becomes a launching pad for us to come back out of that. And structurally, that's what I see. So let me jump and look at the Dow briefly, and then we have a lot of charts to get to. And, the ironic thing is I see industrial strength internally underneath the hood. I do. Look at copper. I mean, just $11,000 a ton. I mean, in what recession have we ever had copper with those elevation levels relative to treasuries of the S&P 500? We've not had that. You look at the freight and shipping order, and last week I looked at, we're not going to do it today because I'm behind, but we looked at both FedEx and UPS, and they're 2 different worlds. I think UPS is lagging because it lost the major contracts with Amazon. However, FedEx is telling me that we're about ready to boom because when for the industrial side to grow, the supply lines need to start shipping in raw materials so they can make their products and goods. So internally, I'm seeing the growth that potentially the SPY chart and the NASDAQ chart is showing me. So let's look at the Russells. Now, the Russells is the financial health of our economy. Even though the Mag 7 is the predominant level, the millions of other small micro cap, mid cap firms, right now, they're not in any kind of trouble here. It actually has a better resolution price-wise, and we're coming out with potentially 3 outcomes at this point. The 618 extension is up to 278. The 50% back is up to 308. And the 1618, really where equality exists here is at 357. So, this has been a larger consolidation. I mean, we went through this band down here, right? Then we started another shelf that sort of was brought in here, right? We overshot it, so really it broadened to this level, and we've been stuck in this next shelf. However, this wick, this shelf holding right here, notice how tight that wick is for the bull side, how tight that wick is for the bear side. It's telling us that's a pretty solid shelf. It looks like it's going to hold. So this is kind of a launching pad. Notice the slope for that 1618. Now, the way I see this is if that slope holds, we're going to do something right along this. We shouldn't back test that line. I mean, it could be within, a standard deviation 2 or maybe 3, of course. But still, structurally, I'm looking at it from that 358 standpoint. Okay, so let's go over the names that are in the recent swing trade notes. There's some names that I like for a particular reason. American Semiconductor. I want to go through why I like it, where we have this sell side imbalance right here, just a little bit above. So we did see a little more aggressive sellers there, but still we're testing it right now. We're just starting to get back into that box. Then we have this lower tier buy side imbalance, which is also a sell side imbalance, which also is another sell side imbalance, which also is a buy side imbalance. So this little line right here is really, I'll note it, there are going to be yellow lines that say more buyers show up. By the way, when I put this in here, more buyers, I'm telling you, this is where I really like more buyers show up. Reason is because we have more than one specific reason related to flow or institutional investors that tell me this is a line in the sand for them. It gets down here, they're buying, right? Maybe we get some buyers here, maybe. And that we did. It was an overshoot. It came down to the lower shelf, but structurally, this is where I really like it. I don't think it gets back down there. However, this is probably a dead cat bounce. This is a great candidate for 50% back. And this is why I structurally look at trades a specific way. When I draw out 50% back, I'm looking for a pushback up to $50 on them. So structurally, that's why I like this. Now, where am I wrong here? That's something I want to talk an awful lot about. This needs to hold. Needs to hold right here. This 28.90. Ultimately, it breaks below that. Then we're probably going lower. However, it still will be within 3 standard deviations. So 1 deviation, 2 deviation, 3. So it's going to come back and this shelf is going to hold. It probably, if it does break down, it's not going to take out that 1528. So when you structure a trade on this or any other stock, I want you to view it from a game plan, or I'm suggesting that you view it as the game plan is, I'm always assuming that this is wrong. So how do I manage my risk? Well, I put a piece on here. I wait for my next shelf. I plan on putting a piece on here. I wait for my next shelf and I plan on putting a third piece here. And then on the 4th shelf, do the same thing. I like 4 pieces versus 3 pieces. Kirk prefers 3. But from a structural standpoint, let me just briefly explain why, since I touched base on that. So when we get our initial flush, right? Now realize that our confirming low is right here. So it's the candle before looking at the week. And we just took it out by a hair right here with this divergence here on this next candle. Notice that little divergence right. So at this point, you always have an overshoot. So this was our prior low, and then we have an overshoot of some kind. We call them stop run. Like for example, this was our initial push, and then we got a stop run, and it took it out. Almost always. So the question is, was this the stop run, or is this the stop run? It could be the stop run. There's no way to know specifically that it's not. But what I like is the level of buyers that came in here and how many large groupings of contracts there were. Not huge, but decent. More than 1,000 contracts were open. So somebody has an interest in chasing this as a dead cat bounce. And I like to look. This type of drawdown is almost always. I mean, look at United Healthcare. Even though we didn't get a fantastic recovery off of that, it still was pretty decent. All right, so let's look at Mobley. Now, I just threw this out today. Been watching this thing for like forever, right? We have our low here. This 1053 needs to hold. So we had a higher low. It rejected, right? Took it out. Now we're overshooting. Note where RSI is. So this is our confirming low, right? We didn't really get a divergent low, but notice the structure here of RSI. Notice how it's increased. That is building a base for a launching pad the way that I see it. Even though we've crossed down here in a reset, the way I look at this, drive 1, drive 2, drive 3 can always be an overshoot. So that's what I see this at. Those are better launching pads. So when we clear this 1585, I mean, this is what we could be looking at. Now realize I don't have the same slope here. I looked at the prior slopes. I landed here, but looking at this particular progression, assuming this is more of a leading diagonal than anything here. But ultimately, our slope could be just as aggressive right here. So in other words, I'm saying this potentially could get back to $20 by the end of March of 2026. That's the higher slope, okay? Again, I'm wrong if we close below that 1053. All right, let's go. We did BX. So BX is very similar. I like this, we had this first buy side imbalance that came in right here. So we had a clear general candle, right? It was followed up by sell side imbalance, by another buy side imbalance. And now what are we getting now? Another buy side imbalance, etc. That's right there. I think this holds, right? Structurally, I see no reason why it can't. Where am I wrong? It closes below this 135.26. I'm wrong, right? Otherwise, I think we're heading back up to 160 bucks for wave one. Wave three should really probably test about 187. And I just like the way that. All right. Let's look at ACN. Nice, huge candle, just building up. Took out this high. So now the structure, when we get our confirming kind of low, which really was back here on this tape. That was our confirming those, not confirmed because it's not a lower low in price, etc. Once we got this overshoot, once it back tested and rejected, once it had this kind of seller exhaustion, look at the body of that wick. Look at the breadth of that. Notice the wicks around there. Notice we're continuing to get seller exhaustion all the way back up here. It's telling us we're going to launch. That's what it wants to do. Really does. Now, the nice thing about ACN is we have some decent history of it building out ending diagonal, right? This is an ending diagonal in the tape, and then we get the rejection. This is an ending diagonal, and what do we get is a rejection. So the most likely outcome here is that we get an ending diagonal, which means wave two is shallow. So, I mean, literally, we could push right up to this resistance band at 308, get a shallow retrace, and then continue to break out into the 618 is a little bit more a more aggressive structure. This is the stuff that I look for internally where, hey, if we're right and we catch it on the right side of the tape, it's going to be like an ONDS from $2 and, we're up 300%. I don't know that that's the case here with ACN, and obviously, prior success doesn't necessarily dictate future result. However, I like the look. I like the structure here. So where am I wrong? It closes below this wick right here, really at this 238.25. That's my 2 cents. All right, now let's look at Gen. And we've been looking at this for a while. We were looking at it down here at 977. We now have taken off this first shelf right here at 1051. We're about ready to take off this next shelf. And then after that is 1240, etc. Notice the extremes that Lux Algo sees in the push here. Sees $14 to $18. So, definitely I think this is set for continuation. MACD on the weekly has not crossed yet. So we are early. If we come down to the daily and we look at that, we've crossed and now we're pushing up. Now we're getting a little more aggressive. The challenging part here is RSI supports it on all 3 time frames, weekly, daily, and the 4 hour. So if you weren't early, probably the best bet is to sell this shelf. $10 cash secured put. Probably the best way to play it. All right, let's look at Bitcoin just for a second. Now, inquiring minds want to know, are we going to reject and go down here? I hate to say it, but I think there's a very high likelihood we do that, simply because if you look at the RSI here, we confirmed basically, or confirming, we haven't taken out this shelf, which really is here. That's this. We need to take this out right here. We need to take out this 93.40 on a weekly close and be above. However, it's constructive from the lows. It still looks like that impulse down to me. Notice how broad the RSI, the MACD crosses down here. Notice how far out we are. Notice how it's sort of like, maybe this is flushing drive 1 here, flushing drive 2. So we should get a third flushing drive, maybe divergence a little bit right there. But I think it heads in that direction. I'm going to add, I've got so many names to go through, Aditi. I'm going to add those to my list real quick. We'll try and get to those. I don't see why not. I think altcoins are in a little more trouble. We haven't entered an alt season, which we should have when the Bitcoin, runs in that direction. We should. That we should be in an altcoin rally right now, and we're not. All right, going back to where I was planning on going. Okay, let's look at SoundHound. Now, we're right at this demand shelf. This is a huge demand shelf. Huge. I just really, you have this, really the shelf here is your strongest buy. That's where a lot more buyers show. And you have a huge expansion zone that occurred off of this low. And it's just, this is a huge expansion. We've taken it all the way back. That was clearly an institutional push. I would think that it's likely that we test this, but right now it's holding. These are pretty decent seller exhaustion candles. One thing I don't like is the way the volume on top of that RSI doesn't really look done. So I look at this as flushing drive 1. In most cases, we get a flushing drive 2, but this at this point looks like it's divergent. So I would think this $10 is a good spot for SoundHound. It doesn't confirm the move of a reversal to the upside until 1321. So right here, this 854 is really the shelf. We need to stay above because we've already we're holding here. That breaks this 1020, then it comes back down to that 825. That's the next shelf. Okay, OSCR. I like this gap. I don't like that inside bar though. And I'm just looking at the overall tape. I like this longer term just because of the attachment to a benefactor from AI. Closes below, gets back into that gap at 1556, then we're probably going to go back and test this shelf. Lux Algo has it as a dead cat bounce, which is pretty much that bounce could be it. So we start closing below that body, I'd be a little bit concerned. But I'm more inclined with this look. This is a consolidation band. When I look at it this way, it's as long as that shelf holds, we look at a WXYZ pattern on that, just assuming this is what we're looking at. Pretty much it's done. We should get an impulse on it. It's very constructive look. Unless I don't like that. I would rather have my final flush here at the end of that. I would rather have that descending, look to it where, we've got something more to this degree, like a wedge look comes in like this. That gives me more conviction when I have that look versus what we have here. That's the only thing that comes to mind. In other words, I would say there's probably cleaner setup, like for example, Oracle needs to hold that 196.70, has much more ups. Now, the question is, what really was this? I've been looking. I haven't found out really why it came off that aggressively. I don't see any big sellers. I don't see inside sellers outside of large groups of contracts. It looks to me like somebody large built a position here, knew what was coming with Oracle. They had insider, the system's baked. I mean, it is, rigged. So I assume somebody owned here, right? Probably added on this breakout. May have taken a few profits here. You can see where those wick offs are. Came back test, held the shelf. Look how close we are to that shelf. Then they took it off for one more time for a final run, and then they dumped on this wick, started selling into this. Sold more. And what they basically do in that situation is they're using retail for the liquidity for them to exit with those elevated prices, those elevated premiums. And, to be very candid, they probably turned around and they were buying $200 puts, knowing that they could push it to that level lower. So I think Oracle recovers here. I think it's got a good AI story. It has solid numbers in their growth related to AI infrastructure. And realize, I'm going to come back and then you'll hear me say this a lot over the next couple of quarters. We have 100x to the upside with AI infrastructure, because when it starts being used for everything, realize it's peripheral at this point, but really not even that. It's related to chat, okay? It's not running everything yet. When it starts running everything, and we need these acres and acres and acres of machines and cooling systems, etc., we have 100x growth from here. If it really does take on the adoption levels like a lot of people are suggesting. So this is the next industrial revolution that's ahead of us with AI. And that's my personal opinion on how we should look. All right, let's look at ICLN. Nice shelf. First thing I'm going to say is a couple of these I didn't get to, but I think buyers show up here roughly at about $15. I'm going to go out to the monthly. When I go out to the monthly chart, I want to see what the history is. And that sort of explains a lot when I look at this. We have this sell side imbalance right here, which we haven't cleared yet. I don't like that wick at the top of that. So we are seeing some price rejection there. Really don't have that. I'm looking for institutions. The next institutional level is way the heck down here on the monthly. So $11. I like it better at $11 for sure. I don't think it gives it to us. All right, let me go back to the weekly. Now that I've got those mapped out there a little bit, we're going to tighten this up. So we're reflecting the weekly bands, not the monthly bands, because they're a little too broad. So fine tune that a little bit right there. That was a nice wick. That was a nice buy. Clearly confirming here on the high. So we're going to be looking for at least to see structurally about how our huge breadth. Look at the expansion between 1 and 2 and then third peaking drive. I'm just going to steal this because it's in the middle. So this is something like what our breadth should be. It's got a lot of upside on that look. A lot of upside right there. Let's just measure the fibs from here. Roughly 618 is back to $18. Doesn't give you a lot of upside off of that. Let me bring in one other one. So 3618 is up around 21. 1618 held on the back test. So viable target is $21 right here structurally. All right, let's look at Pitney Bowes. Nice spot to enter. Good look. I don't know how you found that one, but it looks good. All right, looking at our buy side imbalance zones here, it's going off of the weekly. We're right there, almost wick to 50% back. Good spot to enter. It is a good spot to enter. Put a piece on right there. Clean. Next spot to add is going to be down pretty deep. Even though you have this next shelf that's here, we took it out kind of there. I'm going to leave it sort of halfway. More buyers will show up. A lot more buyers will show up just below on this band here. Sorry, put it on the wrong candle. So this is where a lot more buyers show up right now. A lot. But it looks good. It's good risk reward. Just structure the trade so you have a piece on here. Plan to add here at $6 and plan to add at $4. And your cost basis comes in around $6. Should be pretty safe right there as far as that looks. All right, let's look at GE. Lux Algo has it coming off. It's flagging to me though. Mound 2 clearly our confirmed high. So let me come in and put a Elliott wave count to that. Structurally how I see it. Say clearly was wave 1, and I agree this was wave 3, this is wave 4, but I don't think now 5 could be done. It could be done. Let me put it 50. So institutions are going to buy this at about 237.90, right at 50% back. That's where you've taken out, if you're using confirming trend support and you used your anchors based on your prior low, body of your right here, right? Now you took it out, you didn't clear it, you didn't move up. Once you got this next candle where you cleared your top, you should have moved it up here. You should have been taken out as far as your stop, at least on 50% if you're using confirming trend. So I don't have much conviction to get fully long again until this gets above 316. Otherwise, the most likely outcome is that this is a corrective leg break. I know you didn't want to hear that, but that's my 2 cents. Now, you could insulate, so technically, some covered calls if you plan on holding it. I don't know if you're doing it as a dividend play or not, but that's sort of a look I see. All right, GEV. Let's go down to the daily on this. Well, actually, no, I'm going to. This is really a pretty chart structurally. It's got a lot of upside. Notice the slope, the 618, the 100% fib, and the 1618. Totally viable. I'm just going to put my own fibs on that. 1618 off of this leg is also viable. $1,200 is viable to the upside. 50% back is 742. I would say that's a given from where we are. This is a nice, I see no reason to trim this. None. If we head back towards these lows, I might sell some covered calls on it. Let me go and see ETHE theory. I already have it mapped. Looks just like Bitcoin does as far as that pullback. Confirming trend support was up here. I'm serious, guys, gals. It works. Use it. All right. What else did we have on our list? Sorry, I might be a little more brutal on that this year. It's the number one thing that I highlighted to have to improve on is getting the heck out of positions when it's not working or I'm wrong. I want to keep. Now, when I noted this at $3, I've still got my position from 50 cents. Now, I noted it, I believe, that might not have been till here, right here. That's about 308. I made the comment, well, it's probably a good spot to trim and take some profit. I'm not selling. Well, that was right about 308. That concept was dead on. I don't regret not selling it because I've owned it since 58 cents. So I still think when the government buys first quarter, and that's this whole infrastructure play that's going on in crypto is based on the thesis that the government buys a large chunk of the depleting supply in cryptocurrency, and XRP becomes the on-ramp to that new financial system. We are still in the design phase. It's just like mRNA. It's still early. It's in its infancy. So XRP, my thesis is that with that adoption, we look at $7 plus on XRP longer term. However, let's go to the weekly chart. Let's look at what the chart tells. Chart tells us we're most likely going to bounce here. So we have peaking drive 1, peaking drive 2. So what should we be looking for? A third. Okay. That said, this also could be an XABC pattern. That's challenging too. I see that without even throwing this up here. But the XABC pattern comes back to 58 cents again. It's challenging to hold with that look. However, looking at the MACD, it looks like it's done. Notice how we're getting the lightning red bars. Hasn't crossed yet. RSI is clearly not quite diverging. It's broken the uptrend, the slope, which by the way, RSI tends to slope, so you got your trend. So this was flushing drive 1, flushing drive 2. This was 3, right? And then we had a break. So this there, and this is across the board encrypted. We had a breakdown right there. So structure is broken. So now we need to look at this as a corrective leg. Have we gotten, now notice there's sort of a flushing drive here, flushing drive here, flushing drive here, and then we got another one. So we got 4 flushing drives. So if we go on the thesis of 3, 5, and 8 in Elliott wave, we should probably get at least a 5, probably down around 33. Now, if that becomes a divergent low, lower low in price, and a higher low in RSI, chances are it's done. This supply zone that's down here is a very solid place. There's really not much to measure on this, which is challenging. I mean, technically, it's way the heck down here. This shelf, because that's your first band, that's where a lot of buyers show up, which happens to be where that XABC pattern. So TE. T1 energy. Ooh, actually looks pretty good. Ooh, you're getting good, kiddo. Good pick. So your demand zone one, really, that's where a lot of buyers show. You have another band just above there. It's now been created from this. So we don't want it. What we don't want is to take that out. So structurally, consolidation zone, this is wave 1. So just measuring 1. I haven't put the fibs on it yet, but I will. Assumption 3, we run into some resistance here initially. So you probably get a little bit of a flat. Builds a little bit here, probably rejects on this wick right here. So bringing the fibs into that. 1618, probably a little, might be less of a slope. 100 fib is more viable, so it probably is sort of an equal. 3, it'd need a catalyst to get up there. Structurally from the fib, I'd say 951 is viable. 3 should come in around 684 from where we are, so looks pretty decent there. I looked at the wrong, it wasn't the right tan. Oh my goodness. Why don't you guys tell me when I'm on the chart and I'm going over the wrong stock? All right, so it's tan solar. I knew that. All right, so what do we got here? So we have this second shelf. It's clearly rejecting on this one. That's a bear flag right here, confirming. Until it clears this 48.91, assume it's an ABC, which brings us back to $37. Again, until it clears this $49, assume it's the ABC. Yes, Sentinel 1. I've been getting emails on that stock for 2 years, I think, or it seems that. Sentinel 1. Good spot. Sneeze. All right, so we have this huge buy band here. It's good spot. Good risk reward. Doesn't really confirm the breakout till, let's just take these two here. Got a ways to go up there. We've already taken out this internal slope, so now we're looking at slope 2, which, by the way, this applies, it's the same standard deviation as you look at it from a drawdown. So just looking at the breadth of this leg here from this low to this high, the assumption is that we need to take out this next grouping, sort of equality, and then we'll decide whether we're going to continue higher. But that progressively, it does have a good shot. It's still in this, it's still working in this consolidation band right here. What is positive is this is like an overshoot. So flushing drive 1, flushing drive 2, and 3 is there, and it looks like an overshoot. That gives me some bias. I would be more inclined to hold this than some other names that are small caps, mid caps range. We've now cleared this. Sort of confirms back to the upside about 1751. All right. Well, I think that's what I've got for today, folks. Well, it was fun. And obviously, we'll see you in chat. Great trading until next time.